All right, everybody. Hey, it's Greg Harrelson here with Century 21, the Harrelson Group. And as usual, you see my co-host is with me, Abe Safa, also with Century 21, the Harrelson Group. And we're going to be talking about the real estate market once again. And, as you can see in the display at the bottom right here is the Myrtle Beach real estate market's not going to crash. The data does not say anything or does not point towards a crash, but there sure is some interesting data out there. So we want to talk about the market stats and maybe just give you some additional opinions as to, what one would do if they're trying to navigate through this real estate market. So, Abe, thank you for joining me once again.
Hey, Greg, always a pleasure to do these.
Yep. So what you got here from market stats?
That's a big statement, right?
That is a big statement. That is a big one. Yes, it is.
I mean, so all we can base it on is just current data, right? So based on the current data that we're looking at, I feel pretty confident that we're not going to crash. Now, of course, there's other variables that we have no control over. And of course, depending on how bad the recession becomes, because everybody's predicting a recession coming up the next 6 to 12 months, things could change, right? But based on what we're looking right now, the market is definitely unique. Today is November 1st, so the numbers just came out for October, Greg, and I looked at them this morning, and they look pretty scary, right? But keep in mind, we're also comparing to last year. Fourth quarter was a very, very strong fourth quarter. October, November, December of 2021 was extremely strong. So when we look at single-family homes sold, we were down 34% for the month of October. And when you look at condos, they were down 44% for the month of October. And then looking forward, we always like to look at pendings to kind of get a peek into what next month's closings are going to be. Pendings are down 36% in both areas, both condos and single-family homes. So those are significant numbers. I mean, we're definitely feeling the pinch. The industry is feeling the pinch, whether you're a real estate agent, whether you're a mortgage loan originator. We're feeling the pinch. There's definitely less transactions happening in the market right now.
Yes. Yeah. Yeah. No, as I like to me, okay. I've been through definitely multiple market shifts and back in the crash. I mean, I know you could tell me, I mean, I don't know that you've looked at it. I know you could find the data, but I don't recall in the last crash when sales decreased this significantly in such a short period of time.
I don't recall seeing numbers like this ever, like this significant, this short a period of time.
Yeah, and that's number of sales.
Right.
So I think one of the things that's important is what determines a crash? Because if that's not crashed, I don't know what is. Now, I say that, and please, for you that are in the audience, please hear me out here. I think what everyone feels is the definition of a crash means price decrease. But if that's a crash, that's a more significant crash than right before the recession in 2008. Mark my words, sales were not down that aggressively. That's a crash. But I think what we're really talking about is prices going down. Would you agree? Do you see what I'm saying here, Abe? I'm really trying to say, like, maybe we need to define the word crash, because the area of our
Yeah, you're buffering on my end, Greg. I'm not sure if it's your side or my side, but that's a very, very good point. We have to make the distinction.
It's mine.
Is it you? Okay. Yeah, I mean, so you're absolutely right. There's no question about it right now. What we're seeing in the real estate market is serious. Okay, it's a serious housing recession. When I talk about crash, I'm always looking at it from the consumer's perspective. Most consumers care about is, what's my value of my home? Is it going down? Are we going to see a significant crash in prices? Are we going to see prices drop like they did in 2008, 9, 10? So when I come from the point of, okay, crash, I'm always looking at prices. Yes, as a real estate agent, we're going to see significantly less sales. There's going to be roughly 25 to 30% less sales predicted over the next 12 months than we saw the previous year. So that's a significant drop. That's probably going to be the second biggest drop we've ever had, with the exception of the Great Recession, 2008-9. That's when it dropped. I think we lost maybe 1.5 million homes less were sold during that year than the previous year. So this year we could see 1.3 million less homes sold nationally. So yes, from that perspective, number of sales, number of pendings, all of that looks pretty ugly. But when it comes to prices, it's kind of holding its own. It's down a little bit, but it's really it's not following the trend of the closed sales. You would think it would be getting hammered right now, but it's not yet.
Yeah. And so what do you think turns around the number of sales? Let's just assume prices don't go down. Well, what turns around the number of sales?
The biggest thing right now, the biggest obstacle I'm seeing right now is interest rates. So when you couple the price of homes right now with the interest rates, it's just not affordable for most people. The person, like you put a home on the market right now, $400,000, okay? And the reason you picked $400,000 is because your neighbor sold for $400,000, 5-6 months ago, and you're thinking, okay, that's the value of my home. Okay, the challenge is this: the buyer right now for your home at $400,000 was someone looking at $550,000 home 6 months ago. But because of the appreciation, because the interest rates going from 3% to 7% and pushing, getting close to 8% possibly, it's no longer that buyer is gone. That $400,000 buyer is gone. Yeah, I mean, so that's the challenge. Is it's just not affordable right now based on the interest rates. So we're seeing a low demand when it comes to buyers.
Right. So in that scenario, so it would be if interest rates come back down, then that would probably pick up number of sales. And then if number of sales pick up but inventory doesn't go up, then prices would skyrocket again.
Yeah. For sales to pick up, one of two things or both things have to happen. Home prices have to come down, or interest rates have to come down, or a combination of both. I think it's really that simple. One of those two things has to come down to be able to lure these buyers back into the market.
Yeah. I know that there's a lot of programs out there like the 2-1 buy down. I was just talking about that with the company, and you can programs where you can say if your interest rate was 7.25 right now, or that's what they're quoting you, for a small amount of money, you could actually buy it down to say 5.25, but it's a temporary buy down. It's not for the life of the loan. So there are some things like that programs in the financial world, in the mortgage world, that's popping up to try to kind of stimulate these sales. Because I think from an economy standpoint, we want transactions flowing. Because there's a lot of people that are impacted by a decrease in sales, which is appraisers and mortgage people and home inspectors and home warranty people, photographers. There's a lot of people get paid on a transaction. So I'm hoping that we'll see some sort of stimulus in number of sales. But like you said, something that we don't control is probably going to have to take place. We'll see. It's an interesting time.
I do want to mention, so anybody out there that is looking to sell, I mean, we don't want you to think that it's impossible to sell. Homes are still selling. We're still selling homes on a regular basis, right? The challenge is this: you have to, number one, it has to be marketed very aggressively. And then number two, it has to be priced right. Okay. You can't price it based on what it sold for 6 months ago. You have to take a look at what's happening right now as far as demand out there. You have to look at affordability. You have to look at those things, but homes are still very sellable right now.
Yeah.
So Greg, so one thing I do want to point out that's kind of strange, right? It's, we've talked about this, you and I, a lot. It's the inventory right now, to me, seems weird. It's not lining up with the closed sales. You would think closed sales down 36%, pendings down 30-something%. You would think inventory should be going through the roof, and it's just not happening. As a matter of fact, inventory went down last month. There's I think about 150 or 200 less homes on the market at the end of the month than there were at the end of September. Same thing with condos. So to me, I think that's part of the reason why we haven't seen prices start to crash yet.
Yeah, and I think we both know that, and we've talked about is that a lot of that house sellers are not coming on the market because they don't want to trade their 3% interest for a 7% interest, um, and so they're just saying, well, I'm not gonna, I'll delay my move now, and so a lot of the inventory that's not coming onto the market is inventory that would come onto the market because somebody was buying a property, but the buyer demand is decreased. Part of that decrease in buyer demand are people who would have to sell their home to buy.
Right.
And so they're just not actually putting their property on the market. And I'm going to introduce a concept. I'll talk to Brendan again about it because he shared with me something called a credit lockdown, and I've never heard of it, never really experienced it. And he said that's really should be our biggest fear. Our biggest fear is that the sellers keep saying, I'm not going to list my property because I can't buy, which is now on the other side, the buyer says I can't buy. And so then it's like a lockdown. There's so few transactions going on. And we need a certain amount of transactions in the United States to take place to keep a healthy economy. And there could be a concern that number could dip, and that could actually be something that really impacts the economy. Is there's just not enough movement in the real estate market. Now, I'm not an economist. That stuff's almost way above my head. But it's interesting that I'm hearing these concepts, and there's characteristics about our market right now that like kind of apply. Mm-hmm. We got buyer demand going down and listing demand going down. The listing supply going down or not going up has nothing to do with people not wanting to sell. It has to do with them not wanting to buy in these conditions.
That's absolutely right. Yeah, that credit lockdown basically. So, I forgot the stat that we mentioned last week. I want to say 60% of mortgages out there have a 4% or less mortgage rate. So a lot of those people that refinanced a couple of years ago, for them to sell, let's just say they have a $300,000 home, for them to sell right now and give up their 3% mortgage and then turn around and buy at a 7% mortgage, you're talking about that takes them from a $300,000 home to maybe a $200,000 home. So that's what the challenge is. You're absolutely right. It's not about selling. There's a lot of people that want to sell. They just don't want to turn around and buy in these conditions. So that's a big deal.
Yeah. That's a big deal. And this is where this is a kind of an unknown territory. Like we have not dealt with this. I mean, not in my career of 25 plus years. We haven't had to deal with this. And so it'd be interesting to see what occurs. Now the Fed, I think the Fed, we kind of anticipate that it might go, they may raise the Fed rate by 75 basis points, I think this week. And then I think there's Goldman Sachs is still thinking that there might be another increase sometime in December. Mm-hmm. We'll see after the fact, but it doesn't look like they're going to stop raising the rate. And my fear is I actually think we are going to see 8% interest rates. Mm-hmm. I really do. I don't want it. Trust me, I do not want it, but I feel like we're going to see it. And I think one reason I think we're going to see it almost for just for the sake of like that would really kind of shock a lot of people. And that might be a way to actually get people really to reset and then get this inflation under control. But I don't believe that we're going to be high 7s and 8s for many, many years. I just think that we're climbing and we're going to hit some sort of peak. I think it's going to hit 8. I don't think it'll go much higher. Again, completely guessing. And that's just my gut feelings.
Yeah, I agree with you. I think if you would ask me 4 months ago and said 8% interest rate, I would say there's no way. But I do agree with you. I think we're gonna break 8 at some point. All the projections I'm looking at don't see us getting back down into the 5 range until like maybe early 2024. So I think we could be in there, but a lot of it, hinges on how quickly the Federal Reserve acts. If all of a sudden the recession is really bad and they start slashing the Fed rate again and drives the interest rate back down, then things could turn around quicker. But based on all the projections I'm seeing, we could not be seeing, getting back into the 5s until early 2024. And the reason I mentioned the 5s is I think the anything with a 5 in it, I think is where eventually we're going to kind of settle. The dust is going to settle somewhere in that range. And I think that's what's going to get the real estate market moving again. I think for transactions to start happening again, I think we got to get into a mortgage rate of somewhere in the 5 to 5.5%, and that things will start flowing again. So I agree with you on that one.
Okay.
I'm not sure if you're there. You're still buffering a little bit.
All right. So final thoughts.
There's a couple of stats I want to go over real quick, just to kind of, because when I say the market's not going to crash, there's a couple of different things that I'm looking at. I'll go through them real quick, and I would love to get your opinion on them. One of the first things I look at is right now we're not seeing anywhere near the amount of credit distress that we saw back in 2008. Okay, there's plenty of equity in everybody's homes. 37% of homes out there already paid for in cash with no mortgage. 60-something% of mortgages are less than 4%, so the payments are pretty reasonable. So that's a completely different thing than back in 2005, 6, and 7. Second thing, inventory right now is only 2.3 months in our market. Okay, back in 2009, it climbed all the way up to 24 months of inventory. That's a significant difference between 24 months of inventory and 2.3 months of inventory. Okay, and a lot of people, when they go back and look at the Great Recession, they think that it just happened overnight. It really didn't happen overnight. There was a lot of clues coming in. There's a lot of telltale signs. Inventory actually grew for 3.5 years straight. So month after month after month, inventory was growing and growing and growing and went straight up to 24 months. Okay, so yes, we're still relatively early, but we're not seeing anywhere near that spike in inventory like we were seeing back then. Okay, days on the market back then were 150 days. Right now we're at 60 days. Okay, foreclosure starts. Back in second quarter of 2009, it was 800% higher than what we're seeing right now this last quarter in foreclosure starts. So there's a lot of different data points that I'm looking at that show, look, it's just not likely to have a crash. But again, there's variables that we just have no control over. How bad will the recession get? How high will interest rates get? Things, how weak will the economy get? How quickly will it take the Federal Reserve to react to a bad recession? So those variables could change my opinion of a crash, 3, 6, 9 months from now. But as of right now, the data is just not pointing to any crash at all.
Yeah, I mean, all great data, all great points. Again, my playing devil's advocate, all I'd say, well, all those stats are comparing to the 2007, 8, 6, 7, 8. Well, there's nothing that compares.
Right.
So like for us to be looking at last time, this is what happened as an indicator of this time, this is what will happen. That's kind of like saying, in my opinion, last time the quarterback threw it to the receiver, he scored a touchdown. We're not playing football, we're playing basketball. There is no quarterback, there is no receiver. We're playing a different game. This is a different game. And that's so, but we have to go back historically because this is the only thing we have. The challenge is we don't have a market to reference like this historically.
Yeah, that's a great point. I mean, there could be a crash, but not as significant as the last one, right?
Yes.
It's just ever since then, everything's gone up and up. And when people start talking about crashing, they always go back to 2008. That's always the first thing that comes out of their mind. Oh, 2008 all over again. So that's still stuck in people's minds. But I agree with you. It could go down. I mean, most likely prices will go down. Maybe not to that extreme.
I agree.
Do you consider that a crash or not? We'll leave that up to the audience.
That's right. Yeah. That's it. I mean, right now, from a number of sales standpoint, it's crashing. And I would imagine that there's concerns in the economy about that decrease in number of sales. And maybe it doesn't bubble up in lower prices. Maybe it bubbles up somewhere else in the economy. And which is, again, unknown territory. But here's the bottom line for those of you that are listening. Right now, everything that we just said applies in the most general and broad sense. We are seeing more differences building to building and community to community when it comes to how well a market is. Depending on what neighborhood you're in, that one neighborhood's going to be like thriving, prices going up, and another neighborhood, their prices are going down. Maybe it depends on the price point. For condos, one building is like crashing. One building is like, man, another property just sold in one day for over full price. So months ago, it was like everything is selling. Today, not everything is selling, but there are some things that are thriving and some things are actually starting to decline. And it's just so important for you to talk to one of us or talk to an agent that's got their finger on the pulse of what's going on, but not just the overall market. You got to really dissect it for your particular scenario. So please, if you guys, if anybody out there is thinking about buying or selling, please talk with us. We'd love to guide you and earn your business. Abe, thank you so much, man.
Enjoy it, Greg. Thank you all for watching.
All right. Bye-bye.